Hi, welcome to Financial Marathon, where we embark on a journey to financial independence one step at a time. Remember, it's a marathon, not a sprint. So, in today's video, we'll be looking at a very interesting topic: taxes. I know, not a pleasant topic, but it's a reality for everyone in our modern world. The bigger population mostly complain about them, and then after a while just get used to it and just, adapt. We've heard of this word many a times, but in all honesty, most of us didn't fully understand what it really means or how they work until we hit adulthood. And some still pay their dues diligently depending on how often you need to file your taxes, but still don't know how to utilize privileges set in place that could benefit them and their businesses. So, how exactly do we define this term, taxes? Well, I'll make it as simple can get. Taxes are simply a common contribution made by people living in a specific country or area. In official terms, it's the transfer of wealth from individuals and businesses to a government. Now, by this time, it is certain that each nation has an implemented taxing system in place. Now, these taxation systems will differ depending on individual countries or regions. However, there is a middle ground that is similar and applicable to all taxation systems. Number 1. They are scaled according to each individual's or business's income. This simply means that the taxes you pay as an individual or as a business are proportional to the income you make. And number 2, they are administered and collected only by public authorities. Now, this is self-explanatory. Only the appointed public authorities are assigned, and there are also documents to fill out and sign. Let's face it, no one likes taxes. I mean, who likes the idea of having a chunk of your hard-earned money claimed by the government? No one. And don't worry, it's human nature to want to keep what you worked for. But if we kept all we worked for, then it would be a pretty selfish society. Wanna know why? Well, we pay taxes for a reason, and that reason is for our well-being as a society. This goes beyond us just as individuals, because as human beings, we are social creatures that adapt to living together as a group in a community, which then builds up the society. So now, let's look at how taxes are used. Taxes are used to help build social facilities that are collectively used by everyone. Think of schools, hospitals, roads, public libraries, parks, street lighting, and even military services. Also, important to note is that the performance of economies depend on the taxation systems. Good taxation systems cause the economy to bloom, while on the other hand, bad taxation systems cause the economy to crumble. Taxes are basically the needed foundation that supports these structural systems. So, if we look at it keenly, we do need taxes. And that is why basically every commodity is subject to tax. Both basic necessities and luxury commodities are subject to tax. However, there is a line drawn. If everyone was to pay the same amount of tax for everything, that would be really unfair, and this move could affect one of two parties, either the high-income earners or the low-income earners. Now, to ensure fairness, tax brackets were introduced. Now, these tax brackets are there to declare what amount of tax one has to pay depending on how much income you make. Simple as that. The lower you earn, the less taxes you pay. And the reverse is also true. The higher you earn, the more taxes you pay. Most taxes are grouped into two major groups: direct taxes and indirect taxes. The difference? Well, direct taxes are taxes paid directly to the government by the taxpayer. These cannot be passed on or shifted to another individual or business. Now, a good example of direct tax would be income tax. You cannot ask your neighbor or friend to pay your taxes for you, because it should be a percentage that comes from your income and not your neighbor's income. On the other hand, indirect taxes can be shifted or passed on to another person or business that owes it. A good example for this type of tax would be property tax. The reasoning behind it is simply that a property can exchange ownership at any time, and when this happens, responsibility over the property goes to the new owner as well. So, if the previous owner was paying taxes on this property, then they will stop paying the taxes and this role will be transferred to the new owner. This process is known as a tax shift. It is simply the levying of a tax payment on an individual or a business to be paid by them. Taxes can also be further classified into three terms: progressive tax, regressive tax, and proportional tax. I know it looks like it's getting complicated, right? But hang in there and let me explain. Progressive tax simply means taxing the high income earners more than the low income earners. This increases the tax burden on the wealthy and reduces it on the low income earners. Regressive tax does the opposite of progressive taxes and taxes the low income earners more than it does the high income earners. However, important to note is that this tax is applied uniformly. If you do some math though, you'll see that this way more taxes are taken from the low income earners. Now, one known advantage of regressive tax is that it encourages people to earn more income. As for proportional tax, this taxes every group similarly regardless of income bracket. It is also known as flat tax, which means that the same percentage of tax is applied to all income groups. Again, all these differ depending on individual countries. If you like this video so far, why don't you take a moment and hit the thumbs up button? Also, don't forget to subscribe and turn your post notifications on so you get notified each time I upload a new video. Now, moving on. Taxes are there to generally reduce the income inequality gap. Let's look at some examples of the subdivisions noted above. An example of progressive tax would be sales tax on luxury goods. This may include accessories such as high-end watches, high-end automobiles, estates, etc. A certain percentage of tax will be applied on such items which comes with the purchase or ownership of these items. Progressive tax is actually a good promoter of income equality because it says, hey, here is the rule. If you're going to buy this boat, then I'll take a little something from that. We have a library to build. If you don't buy this boat, however, we're good. You owe me nothing. When we look at regressive tax, a good example of this would be sales tax on consumer goods. Take for example two people, person A and person B. They both go to the supermarket and decide to buy a piece of clothing. If the piece of clothing was going for 30 euros, they will each pay the same price for the clothing, which means the tax on that clothing will be the same for both person A and person B. However, person A earns 25,000 euros per year, while person B earns 100,000 euros per year. The tax deduction on person B that was on the piece of clothing will be way lower in regard to his income bracket as compared to person A. Regressive taxes tend to have a negative effect when it comes to income equality. This is because although the percentage of the tax is similar, let's say 3.5%, it will pinch more income from a low-income earner than it will from a high-income earner. It basically says, hey, if you're going to buy this piece of clothing, then I'm going to need you to pay a certain amount to it. How much you make though doesn't play any role here. Plus, you need the clothing anyway, so you don't have an option. The last example is on proportional tax. This type of tax assesses the same tax rate on everyone regardless of income or wealth. Now, here we can use household tax as an example. A certain percentage of your total income as a household goes to tax, say 15%. And this percentage will remain constant regardless of income. So, it doesn't matter if you make 40,000 in one year and 100,000 in the other year. You'll still pay the 15% regardless. Now, with that information, you now have basic knowledge on taxes, the different types of taxes, how taxes work, and how we need them as a society. This information is there to simply give you a foundation to understanding the taxing system depending on the country you live in. Like I mentioned above, the systems may differ a bit, but they all have the same foundation according to economics. It is also important to know the importance of taxes and the impact they have on a nation. Without a proper taxing system in place, there would be a lacking in vital public services like funding of the military, funding of public service workers in hospitals, schools, and libraries, and this would eventually cause a slow growth in the economy. So, next time you hear about taxes, don't be too negative about it. Instead, you could educate yourself to find out more by doing your own research or consulting a professional for up-to-date and, of course, correct advice. That was all for today's video. Don't forget to like this video by hitting the thumbs up button and subscribe to keep up to date with my future videos. Stay safe and take care.